All right, traders, happy Wednesday to you. Welcome back to the New York Live Trading Room. How is everyone doing today? We got the right time today, right? Finally caught up on the daylight savings time. Speaking of which, we are going to do a coffee break today. I know we were talking about trying to figure out what time we're going to do it. It is going to be 2 p.m. UK, 10 a.m. New York. I think that is, right? We're 4 hours, 10, 11, 12, 1, 2. Yeah. So I think a normal 10 a.m. New York, 2 p.m. UK, so an hour earlier over there. But talking about post-trade analysis, this is actually a topic we wanted to do for a few weeks, but Jason was late coming back from an event he was doing 2 weeks ago. Then I was out of town last week, so we're finally going to get to it. But I'm excited about that topic. Hey, Duncan, thanks for asking. Holiday was good. Again, we had 5 beautiful days and then 2 days of a tornado, but it's all about ratios. So I'll take 5 days compared to 2 any day of the week. Plus, it was snowing and ice storming back where I'm at. So cool. So today, very good. I judge everything in risk reward. I actually do, by the way. I did that for a trading coach podcast topic. It's funny, like I risk management, right? So I started in trading and then I started using like risk management tactics in my gambling. So I wasn't as much of a reckless gambler. And now like I literally find myself measuring out risk reward ratios for everything I do. Like, one of the greatest examples I'll give is like going to work, right? If I'm late to work and that light's yellow, it's like, okay, risk reward of me taking it versus like if I have plenty of time in the world, like it's crazy. Everything is like this quick little calculation. Trading has ruined me, but I don't have a lot on the radar for today. I actually have nothing on my watch list that is new. So we're going to do kind of a viewer's choice today for those watching on YouTube or TradingView. So if you're on YouTube and TradingView, usually you don't get any say in what we look at because I bring you on for the top trading idea of the day, which is predetermined. Then you ask if we can look at this and look at that. And I say, no, we can't because I'm only going to share with you one trading idea for the day. And I kick you out and I say, come in tomorrow. Today, if you have something you want to take a look at, please shoot it in. I actually will take a look at it. Same thing goes for the live room members, of course. But getting started today, let's talk about the news. Today's a news day. Today is an interest rate hike day. You'll hear me call it a Fed day. Any update on dollar yen? Filled and going sideways. So yeah, nothing new from yesterday on dollar yen. The trade that we projected and predicted completed. As far as like the not completed like hit targets, but completed as far as the entry. Now it's just waiting. Now it's just waiting and doing nothing, and it will probably wait until 2 p.m. Again, I don't expect the markets to do much before an interest rate decision. These are the biggest news events, right? If we go back to thinking about how the market moves kind of like in gears, interest rates are the biggest gear, and all the other ones that it kind of affects everything else, and everything else affects it. We do have an interest rate decision today. There is an expected hike. Now, the expected hike is going to be of 25 basis points, right? Before the Ukraine-Russia war, the expected hike was 50, right? I think overall this year they're expecting either 150 or 175 total. So it's just rate hiking cycle. But it did get reduced because of, the expectation got reduced because of the war. That was kind of the guidance that was put forward. Now, with that being said, there still is a chance that it could be hiked by 50. And if there's one thing we know about news, or if you're new, there's one thing you should know about news is that markets typically don't move off of the news release, right? This is the whole kind of buy the rumor, sell the news type of slogan you hear all the time. Markets move off the deviation of the expectation. So if there is an expectation and news meets that expectation, there's typically no movement because it was expected. It was already priced in beforehand. Where you get those crazy moves that you see every once in a while is when there is a deviation. So if everyone is banking on 25, right? If everyone is banking on 25 and they end up sticking with the 50, do you think that's going to have little effect or big effect on the market? What do you guys think? Bigger effect on the market because now everyone's scrambling for a new position, right? It's very similar, right? We talk about the philosophy of reading a candlestick, right? Let's go to that dollar yen real quick, and let's say you're in this dollar yen, right? Let's say you got short right here off of a double top, a beautiful double top, RSI divergence, RSI overbought, all the fun stuff, right? At this point, how are you feeling about your position? Are you optimistic that price attacked it and held? Are you kind of neutral because you're like, it was supposed to happen? Doesn't really say anything good in my favor yet. Doesn't say anything against me in my favor yet, right? What's the difference, right? This is the expectation, right? The expectation is that we're going to form this double top edge structure and we're going to hold. Now, we don't know the result, but this is the expectation. If price were to put in a candle that violates this level, a higher high, higher close, right? All of a sudden, is that with or against your expectation? All of a sudden, that is against your expectation. Now, we're professional traders here, right? So we kind of go into each position understanding that, hey, this thing could win, this thing can lose. There's no panic. It's part of trading. But imagine yourself as go back into years, a newer, younger, emotional trader, right? You ever been that trader where you think that everything you take is supposed to win? Anyone ever been there? Where it's like, whenever you execute a trade, this one has to win, this one needs to win, right? I used to be like that, where every trade I took had to win. If it didn't win, there was something wrong with me, right? So imagine you're in that boat right there where everything you take has to win. Then all of a sudden you get this higher high, higher close. You're scrolling through your tier one trading notes. It says, okay, higher high, higher close. If I identify a higher high, higher close, that means my prediction is that price is likely to continue higher. If price is likely to continue higher, it's going to take out my stop loss. So all of a sudden, what's happening? Now you're in a little bit of a panic. Now you've got to change your game plan because you were short, and now the signal on the chart is telling you long, 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 long. Now you're in a panic. You have to readjust and all that fun stuff, right? It's the same thing with news. If the market is banking in, if the market is banking in on this 25% hike, and all of a sudden it's 50, that money's got to get moved around and adjusted to the new circumstances. So that's one thing that moves the market. And that goes for any news event, but obviously the bigger ones have a bigger effect. The other thing that can move the market is looking towards the future. So I think I deleted my Forex factory, but but after the interest rate statement, I don't even think that's the biggest thing. After the interest rate statement is going to be the press conference. And the press conference is where there's going to be questions. And those questions are going to be about the future. And that's what the market is really looking at. Okay, we know what we did here today, that we knew that was going to happen. What's the future hold going forward? Are we going to be more conservative than we thought? Are we going to get aggressive again? There's this funny little retail sales thing coming out today, which could be important, right? Especially given how things have slowed down a little bit with the war. Is this going to have effect on the future rate hike cycle? So that 230, in my opinion, is going to be the more important news release than the 2 o'clock. Unless the 2 o'clock does something out of the norm. So long story short, be aware from about 2 to 3 o'clock in the market, New York time with daylight savings. Be aware. This is our big news event for the week. We could see some movement there. All right. So let's go to our trade of the day. I said it was going to be viewer's choice. We got a YouTuber, crazy like a fox 101, says, Can we look at the euro dollar? Sure. Anything specific you'd like me to look at on the euro dollar? Euro dollar had a nice Gartley win the other day. Kickstarted my March, even though we're halfway through, but I've been on a trading hiatus for a little bit. But euro dollar had a nice Gartley the other day. We may have another advanced pattern setting up as well, depending on your eyes. But let me know if there's something specific you want to look at. If not, we're going to do some overall analysis of the euro dollar. And then we'll move on from there. Live remembers, we're probably going to spend more time on the lower time frames today. Again, I didn't see much on the higher time frames that gave me much interest. So we'll probably go down to some day trading time frames, see if there's some short moves we can look at. But euro dollar. IPDE. Let's go through that process. Identify, predict, decide, execute. Why? I clean up some of my background stuff. Walk me through the process, guys. Identify. Where is the euro dollar trading? What has the euro dollar recently done? What would you say? Bullish trend, bearish trend. Have we made it to previous structure? Are we approaching previous structure? What have we done? Antonio says downtrend into previous structure support. I would agree with that. Now, based on this identification, right, this is see how the process works. Based on this identification of identifying that we were in a downtrend, and then we've made it to previous structure support, does that allow you to make any type of prediction? Are you predicting that price is likely to continue lower? Are you predicting that price is likely to continue higher? If we've continued higher, did we already go to wherever that prediction was? Talk to me, guys. If you guys are new, this is how I like to teach. My teaching style is a little bit different. I'm not a big old ego maniac who just wants to talk all day. I will talk, though, if you allow me. But I want you guys to be involved. I think the best way, and it's not just me, facts show that the best way to learn and retain information, I should say, which I guess learning is retaining information, but the best way to retain information and learn is to not just listen, not just watch, but participate. Does anybody know the next step after that, by the way? In the scale, I had a graph of this a while ago, the scale of retaining information, where I think it's like 10% of what you hear, 20% of what you see, 30% or like 40% if you hear it and see it. Then it goes up to like 50% if you participate. Yep. Teaching someone is next. If you teach someone, I forgot the numbers. I'm probably butchering all of these. It's been so long. But if you teach it, that's by far the highest way to understand and retain information. And that's 100% true. So we've come into previous structure. Antonio says, for right now, nothing that says which direction it would go. And I agree, right? So we bounced off a structure. So I don't see any reason to predict that we're likely to continue lower until we violate this level of structure, really high volume at the structure level as well. And after bouncing off of that structure, we've returned to our previous new structure low, right? Our inside level of structure here. So my expectation, aside from any type of, again, crazy movement today, oh, I just saw gold over on TradingView. Sorry, a little late, but watch the recording. We did talk about the FOMC, not the FOMC, the interest rate impact and whatnot. But we talked about how that works a little bit earlier. So if you get a chance to watch the recording, do that. But yeah, I would expect some type of consolidation. Here's an interesting question that we always get, guys. Which way is the market going to move off of the interest rate and FOMC and press conference? Up, down, which don't really mean anything in Forex. Pro dollar, con dollar, or no one knows. The answer is always nobody knows. Nobody knows. Yep. All of the above. There we go. Every way. You know what? That's actually pretty true, Orsi. It will get whipped up and down. And that goes into another thing about manipulation and how rookie traders get burnt in the market trying to be cute during these news announcements only to get taken advantage of. But we'll save that for another day. So we're in consolidation right here. So two things to expect in consolidation. We can expect like a consolidation pattern, a flag, a pennant, a wedge, a triangle, one of those things. We still don't really have, because we were at structure. You can predict a breakout off of those patterns. It's hard to make a directional breakout because we're not at any type of key directional level. Or we can look for advanced pattern formations. We've had a few already as we go down to the lower time frames. But as far as a bigger picture projection, really nothing. I can't predict a move higher until we get past this inside level of structure, this minor level of structure in here. Can't predict a move lower, honestly, until we get to the lows down here, speaking higher time frame. So we're kind of stuck like Chuck in the middle of this range here. And again, that's not necessarily a bad thing, because you could be a range bound trader. You can look for small moves up. You can look for small moves down, especially on the lower time frames. And that's why I said we're going to spend a lot of time looking at the lower time frames today. Now, looking here on the 4 hour, right, making some really early predictions, right? Do you guys see anything that could be forming? Again, we had a nice Gartley pattern yesterday. We may have something else today. We may have something else. Well, we may have a few other things today, but there's a few things setting up, thinking of consolidation. And again, understanding the market conditions helps bring your eyes to certain things. So again, if you know we're in consolidation, we know that certain pattern formations tend to form in consolidation. So when you see the market, or when you identify the market within those levels, it should be kind of a tap on the back, like, hey, lock in to see if I'm missing anything, right? So Antonio says, bullish bat. I would agree. If we look at this move right here, swing low to swing high, that's going to be our X to A. So our impulse leg or anchor leg. We're going to take our Fibonacci retracement. Professor J, real quick on YouTube, says the one that learns most in the classroom is the teacher. Man, I say it all the time, Jay. I don't think I would be, and I don't consider myself a great trader. I'm a good trader, but I wouldn't be as good of a trader as I am if I weren't teaching. Because I am fortunate enough, I have a habit of getting lazy, first and foremost. I am fortunate enough to work with traders every single day, teach traders every single day, and we always get new traders coming in every single day. So I am consistently running through the same concepts and being tickled with new questions on a daily basis. It is amazing for learning. It is amazing for accountability. It is amazing to stop myself from getting lazy. And the cool thing is, everyone's a little bit different. So you got to teach people in different ways. Like I can explain something to Antonio that may not make any sense to Chris. So now I got to figure out a way to teach it to Chris. And figuring it out, that is a great way to learn. I was watching my kid do this yesterday. We had a homework assignment where he had to make a leprechaun trap. And I try to let my kid fail. I think that's very important, right? Try and fail. So he's coming up with all these ideas. I know these ideas aren't going to work, right? But they're like these extravagant ideas. Like if we make this pulley system and attach this 18-foot rope to it, and I'm like, all right, well, there's no way we're getting an 18-foot rope and a pulley system on a bus. But his gears were turning, and he was learning from it because he kept trying and failing and then figuring out an adjustment. And it's a beautiful thing. So we have a potential. You guys said bullish bat. We're going to start with the Gartley here, a bigger one. We have a potential Gartley setting up, right? We're not quite there yet, but this is going to be our X to A. This move would be our A to B, our second leg. We're going to take a Fibonacci retracement once again from our A leg to our B leg. And if price action pushes up to our 618, this would give us a potential, or this would give us a C leg. And then the last move would be a Gartley down here. So you can throw that on your radar real quick. Again, that's the one that's going to be a little bit longer, but something to put on there because we may see some wacky movement today. We can erase this point and look at a potential bearish bat for some people, right? Again, if we take this as our X to A right here, this being our A to B, this being our B to C, and then our CD completion right up here at 110.95, right below that 111 even handle. That could be a potential bearish bat pattern. Again, if you have this as an impulse leg. Another thing you may have is, what else? One more thing here. Just a smaller one. Smaller one. Bobby typically loves these things. You may actually have a cipher too. I didn't look at that. Yeah, you could have a cipher there. You can draw that in. Yeah. Yeah, I didn't even see that. Yeah. Good eyes, guys. Yeah. You could have a potential butterfly, right? You look at this move right here, and I'll draw it out with a, well, I'll draw it out first, and I'll draw a triangle in there to make it easier to see. But give me a second here, guys. And again, this is all depending on how you draw these things, right? But if we look at X to A right here, A to B coming into that 786, this deep retracement, B to C down here, you may have a butterfly completion again, depending on how you draw them, either at your 127 X to A right here, or excuse me, A to B right here, or your 127 inversion right there for a potential butterfly pattern. Now, I didn't notice the cipher, but you guys are dead on, actually. And let me just make sure this is legit. I'm going to crowd your charts one more time, guys. So again, this is the beauty of consolidation, where all of these things happen. But you would have a cipher. Let me steal this fib real quick. Then I got a question about patterns on YouTube I'll answer. You would have a cipher X to A to B, yeah. Good eye. B to C down here, 127, don't violate the 144. And then C to D right up there. It's a very good eye, yeah. So you can see, as we often say, consolidation breeds pattern formations. When you get, pattern formations, if you look at the nature of pattern formations, they are a series of smaller retracements and extensions. And when you get those smaller retracements and extensions and failed extensions in many cases, you see those in periods of consolidation. So whenever you notice periods of consolidation on your chart, and there's a smaller Gartley in here from yesterday, if you guys remember, when you see those small periods of consolidation on your charts, be on extra alert for potential pattern formations, because that's typically when they tend to occur. YouTuber, we got Granville has a question. Do you take Gartleys with an inverse risk reward? I do not. No. The only trade setup that I take with an inverse risk reward is a cipher pattern. So everything else must have a minimum of 1-to-1. The cipher pattern is the only one that I would take with an inverse risk reward. So what I used to do, Granville, is I used to just ignore Gartleys. If it didn't have a 1-to-1 risk reward, I would just throw it out the window, right? Then remember we had a mastermind group, and someone much smarter than me said, Akil, why don't you just adjust your entry? And I was like, good point. Never thought of it. Never thought of it. So what I do now is I adjust my entry higher to the point where I have a 1-to-1 risk reward. So if we have a Gartley pattern like this, for example, let's make a very shallow one, right? 618, something like this. A little bit. If we have a Gartley pattern like this, and let's say my risk reward is wrong way. Short. Let's say my risk reward is something like this. In the past, I used to just be like, well, I can't take it. But what I'll do now is I'll just move my entry higher. I'll move my entries up to whatever gives me a 1-to-1. Now you gotta make sure you change your targets as well, because fibs do roll. So it's not just moving the entry and being like, oh, we're 1-to-1 here, I can take it. Because those targets, if you're using Fibonacci based targets and you're rolling them, they move up as well. But I'll just enter higher at a 1-to-1 point. Again, something I never noticed till that trader brought it to my attention, because when I started off, man, if I was so strict with rules, I was in, and my mentor, my coach was like a drill sergeant. So it was like the army. It was or it wasn't. Yes or no. Do or ditch. I was super, super strict because I was very undisciplined. So I had to be. Couldn't allow myself room for adjustments because I just wasn't taught that way. Bobby says, is that because you get a good win rate with ciphers? Yes. Yeah. A good win rate with ciphers, and the frequency of completion at a higher entry point for ciphers is a lot lower than with Gartleys. I don't have a lot of Gartleys that are inverse, but you lose a lot of the frequency and completion with them. And completion, I mean like entry into the trade. Because with ciphers, remember our entry is always at that 786. So to have a 1-to-1, you've basically got to move up to like the 886. And then it basically throws it off into that, I don't want to say gambling, but that kind of pick or choose type of deal where there's no consistency in what ciphers you're trading. And it's kind of just, maybe this one, maybe that one. Yeah. So we've had a few traders that have tried just changing the rules in general to entering at an 886. I don't think any of it came back positive. But I can't tell you for sure. I haven't seen the results. But I remember I've had a lot of traders ask about it. I've had a lot of traders say they do it. They haven't necessarily come back and say that. I would assume if it worked greatly, they would have come back and told me. Let's put it that way. Or it's worked so good that they don't want to share the secret with anyone else. But yeah, so and Bobby, that was another reason why I hated the cipher pattern. Like I did not like the cipher pattern. It didn't. There were so many things wrong with it, based on my my principles of the market. But the numbers didn't lie. I mean, so I ate my words. Bobby said, I've noticed that with bats too. You hit the 786, then hit targets. Yep. All right. Lower time frame euro dollar. I don't think we have much here to talk about, but we found some good things for I forgot who talked about it. Crazy like a fox. Hopefully that's satisfying for you. I guess from a day trading perspective, digging in a little bit deeper, not to make this first session too long, but you are trading at a previous level of structure. So as you go down to a lower time frame, your day trading time frame, you can look for shorts here. What is one thing you need to pay attention to? Look to the left. There's your clue. Real quick, Papa RSA says, Poppy. Hey, Poppy. Poppy RSA says, how do you build your confluence before confirming a Gartley pattern? I don't need any confluence. It just has to hit the rules. So if all the rules are met, I don't need anything extra to add to the Gartley pattern or to any advanced pattern. So they stand alone in their own right. So yesterday, I don't know if you saw yesterday's video, we talked about like CTS trading where you're building a case for entry with different kind of techniques. Patterns stand on their own. If they hit all the ratios, limit order goes on. But yeah, we have overlapping levels of structure here, looking left. So we know we want to be careful of overlapping levels of structure, very dangerous. So keep that in mind if you are going to look for lower time frame shorts. Heading down to the lower time frame, we end up having a higher high, higher close above this level. So that's going to poo-poo any opportunity you had anyway. So not going to be much on the lower time frame. All right. Any questions on euro dollar? Before I kick the live streamers out, please, before I kick you out, hit that like button. Subscribe if you haven't already. That way you won't miss these videos. We could have a potential cipher setting up here actually in 5 minutes. But the feedback has been going really, really good for these live streams. So hopefully you guys are learning something. The live room members, I know you guys have said cool things as well because you get to kind of judge, nothing against the YouTubers, but you kind of get to judge where you're at, where some of the questions you were asking before, now you're answering those questions, which is pretty empowering in my opinion. So you guys have been saying that you've been enjoying it as well. One more question here before we boot you. Jay says, with regards to the Gartley pattern, I always measure X to A leg for the 786 and the B to C leg to get the 127. Then I use other confluence factors to pick the appropriate Fibonacci level. Nice. Awesome. All right. I'll see you guys tomorrow, YouTube and Trading View. Again, be careful out there. Fed Day. Live rumors. Where would you like to head to next? Again, it's going to be nothing much on my radar. It's going to be more of a lower time frame trading type of day based on what I had on my radar.